are staring at a recession. This includes the likes of the United States, United Kingdom, Japan, South Korea, Australia, Canada, and the Eurozone. This is according to a recent report by global agency Nomura. It says a number of major economies will enter a recession within the next 1 year.
Let's talk about the U.S. economy, which has now dipped for 2 quarters in a row. That means a technical recession. There wasn't a big market reaction to this GDP.
So tell us, do you think we're heading for a global recession?
A global recession is a very difficult one to predict because the nature of emerging markets, which have fast growth,
कि महंगाई और आर्थिक मंदी आपकी तरफ बहुत तेजी से बढ़ रही है और इससे पहले कि आपकी मासिक आमदनी पहले के मुकाबले आधी रह जाए और खर्चे पहले से डबल हो जाएं, आपको सावधान हो जाना चाहिए.
So hi everybody, let's talk about what is recession. So the first topic we will discuss about that, what is recession, what causes recession, recessions and the business cycle, how long the recession lasts, can you predict a recession, how does a recession affect on us and our businesses, 5 things you shouldn't do during a recessions, and lastly, why India will not face recession. Hi everybody, let's talk about recession. So during a recession, the economy struggles, people lose work, companies makes fewer sales, and the country's overall economy that declines. The point where the economy officially falls into recession depends upon the variety of factors. So let's talk about these all important factors which I have to be discussed today, and let's go on. In 1974, economist Julius Shiskin came up with a few rules of thumbs to define a recession. The most popular was 2 consecutive quarters of declining GDP. A healthy economy expands over time. So 2 quarters in a row of contracting output suggest there are serious underlying problems according to Shiskin. So, the National Bureau of Economic Research is generally recognized as the authority that defines the starting and the ending date of United States recession. NBER, that means to say National Bureau of Economic Research, of what constitutes a recession, namely a significant decline in economic activity spread across the economy, lasting more than few months, normally visible in real GDP, real income, employment, industrial production and the wholesale retail sales. The National Bureau of Economic Research definitions is more flexible than Shiskin rules for determining what is recession. Let me give you an example. The coronavirus could potentially create a W-shaped recession where the economy falls on 1 quarter, starts to grow, then drop again in the future. This would not be the recession by Shiskin rules but could be under the National Bureau of Economic Research. A sudden economic shock, excessive debt, asset bubbles, too much inflation, too much deflation, technological change. There is more than one way for a recession to get started. For a sudden economic shock to fall out from the uncontrolled inflation. These phenomena are some of the main driver of recession. So let me give you a set of example of all those which I was discuss about these things. So a sudden economic shock. An economic shock is a surprise problem that creates serious financial damage. In the 1970s, OPEC cuts off the supply of oil in the US without warning, causing a recession. Not to mention endless lines at the gas stations, the coronavirus outbreak, which has shut down economies worldwide, is a more recent example of sudden economic shock. A second would be for the excessive debt. When individuals or businesses take it on too much debt, the cost of servicing the debt can grow to the point where they can pay their bills. Growing debt defaults and bankruptcies then capsize the economy. The housing bubble is the mid-August that led to the Great Recession is a prime example of excessive debt causing a recession. Asset bubbles. When investing decisions are driven by emotion, bad economic outcomes aren't far behind. Investors can become too optimistic during a strong economy. Former Fed Chair Greenspan famously referred to the tendency and irrational exuberance in describing the outsized gains in the stock market in the late 90s. Irrational exuberance inflates the stock markets or real estate bubbles, and when the bubbles pop, panic selling can crash the market. Panic selling can crash the market, causing a recession. Too much inflation. Fourth would be too much inflation. Inflation is the steady upward trend is the price over time. Inflation isn't bad thing per second, but excessive inflation is a dangerous phenomenon.
5 things you shouldn't do during a recession. When the economy is in recessions, financial risk increases, including the risk of default, business failure, and bankruptcy. Avoid increasing and, if possible, reduce your exposure to these financial risks. For example, you will want to avoid becoming a consignor on a loan, taking an out adjustable rate mortgages, or taking a new debt. Workers considering quitting their jobs should prepare for a longer search if they decide to find a better. If you are a business owner, you might need to postpone spending on capital improvements and technologies. The last one, which I will discuss, no chances of India getting into recessions or stagflations for now. Though a number of economies are at risk of facing a recession in the next 1 year as higher prices are prompting central banks to raise interest rates. A Bloomberg survey of economists shows that India has zero probability of slipping into the crisis. In general, Asia faces 20 to 25% of chances of witnessing a recession in the next 1 year.